We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up NZD, USD. We are on the monthly time frame. Price action, last candle to the right hand side, look like a bearish red doji, very small. So we do have price action overall, higher highs, price action overall, lower lows, midpoint. Also adding second level lows and third level lows. So zoom in price to see what's going on. Price action is currently sitting at price of 0.61102. So if price works its way up, it can head up to the next level. So we'll just take it up to overall midpoint between those SR lines. So price can head back up to previous numbers of 0.66132. If price action works its way down from the current SR line, it can work its way down to the next level, which would be near 0.5912. And if price works its way down to that previous level, midpoint between both of the red SR lines, so price can make it to areas of 0.55525. So as I said before, on the monthly time frame, price action is a bearish red candle sitting as a doji. Second last candle before that was a bearish red candle with a push up to the top, so it came back to retest. So this is enough momentum that the market can push down further through this SR line to the following area. But price action is a doji, so the market's indecisive. Want to see a pattern engulf that area, but definitely breaks through the SR line to the upside or downside, because price is currently sitting on that SR line. So we have overall patterns that push that market into that area. So it could be doing a few things. So let's say the market's going to work its way up from this area. Market's identifying coming from that overall first leg, second leg, third leg, fourth leg. So we have a double bottom formation. So market broke up to the highs, first, second, third, fourth, and then came back for a full retest from the previous side to see if it's going to identify a pattern in this area for that market to push up from that double bottom and retest. If not, market's coming from a pattern at that high area. So let's break this down. At that high, we got multiple pushes to that top. So let's draw out what we see. First, second, third, fourth. Market came back to retest, one push, retest, two push, retest, three push, retest, four pushes. That's exhaustion. So market can push for one more time. If it does break out further, it's coming from another pattern in that area. Or the market, as I said before, can consolidate side by side with the price second and some of the third to last candle in the market with that long wick. Walking down to the weekly time frame, price action on the weekly time frame is a bearish red doji. Second last candle is a bearish red push down small candle similar to a doji. So we have to see a candle that's going to engulf the price action, maybe some of the second last candle, or unless price breaks. If price breaks this area and push down further, it's coming from that downtrend of that pattern that's right above it. So we do have the break, we do have the return. So that's identifying the first, second, third, fourth. So we're looking for that break of that SR line. Market comes back to retest or identify a pattern to push down from that double top and retest. If not, market's going to draw a pattern here that's going to identify that first, second, third. So I mean, we're looking for a pattern to engulf the price action current doji to push that market up for that W formation. And we can find that from on Forex pattern cheat sheet. Click on images. On the daily time frame. So if we on the weekly time frame, price does work its way back up to the previous level. So we'll break down the price action high, low. There's a midpoint sitting this level here. So price can head back up to levels of 0.62913 on the weekly time frame, And if it breaks that area on that weekly time frame to the low, it can head down to the next previous area, which we did identify this SR line for the monthly time frame. But if you put a midpoint line in this area here on the weekly time frame, price can stop at, if I'm getting this right, market can tag that area of 0.622 before working its way down to that monthly time frame level that we identified for 0.59152. Walking down to the daily time frame. On the daily time frame, we have price action as a bullish green candle, more like a large doji. So market is identifying that it came back to retest. So we had a pattern up here. Okay, so we do have overall first, second, third, fourth. Okay, retest one, and market just retest this previous area to see if it's going to push back up to the SR line near that zone. If not, market's coming down for that push. So we're looking for an engulfment pattern towards that price action second last candle, and that's consolidating on the daily time frame. On the 4-hour time frame, we do receive a pattern. Price action is a bullish green doji, second last candle long doji, push up to the top. Third last candle is a press up to the top. Third two, identifying as having a hard time breaking, three pushes to that top. Pattern happened at the low, identified as a first, second, third, fourth. If it's respected for that break of the SR line, we're looking for a pattern to identify itself bullish green to engulf the price second, third, close out. Market's coming from a double bottom. If not, the market's coming from a decline double top, multiple pushes to that top overall, first, second, third. Market's coming down for that double top. And if market price work its way down on that 4-hour time frame, it can head down to the next level or near this level of 0.60553. And if price action work its way up on this 4-hour time frame, price head up to the next level, we have price action high, low, midpoint. So it can stop at that midpoint before pushing up to the next level, which would be at levels 0.61407. 3-hour time frame, identifying the same thing, looking for something to engulf the price second and third last candle. Price action on the 3-hour time frame is a bearish red candle with a press up, bullish green candle with a press up. Market's starting to consolidate on the 2-hour time frame. Okay, 1-hour time frame starting to receive some structure. We'll talk about it on the 45-minute time frame. So on the 45-minute time frame, this area is going to be respected for the second last candle spike down for that doji. Market identify the overall first, second, third respects, come back up for that double top. If not, multiple pushes to that top, which will be identifying the overall first, second, third, fourth, looking for a bearish red candle to engulf. Market's coming back down to the SR line of 0.60896. If not, market's going to consolidate within that area until we receive that breakout of that pattern. Walking down to a 30-minute time frame. Same as well, starting to see that consolidation. Same as well, 15-minute, we see that pattern forming. On a 5-minute time frame, we are having price action as a bearish red candle with a spike down to that low. If it's respected, we're looking for a candle to push that market off of that, and market will be coming down for a spike up and pushing off. And so, market's coming from that overall first, second, third, fourth double bottom. And you can see the range out zone. So price work its way up on the 5-minute time frame. If you guys trading this, it would have it to that zone level near 0.61212. Walking down to a 3-minute time frame, still reading the same thing. Bearish red candle spike down to a low. 1-minute time frame, still reading the same thing. Second last candle, third to last candle, very dominant with those spikes. You want to see a price action candle to engulf that second, third last candle body, and may just engulf the wicks to push that market into that direction. Very important information. Please study Forex pattern cheat sheet. Click on images, breakout retest strategy. Click on images. Okay, guys, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention. NZD, USD.